a little bit more money. It's easier for liquidity, which we know crypto prices respond very favorably to that. So let's actually dive and just do a quick little look at where we're at today, kind of a mixed bag. We keep bouncing really between like 61,000 and 57,000, you know, and I'm fine with that. That range is totally cool with me after having that plunge to 49.5. That's A-okay with Mike Newton. So, you know, mixed bag here. FTM seems to be finally catching up and moving a little bit after getting slaughtered. Aave, I'm going to have a little bit to say about Aave. I talked a little bit about that last time, but I've been very impressed with that protocol and just how well they're doing. So, okay, and then also fear and greed. I've been keeping a very close eye on this, and it's interesting, right? Because if you look at where we're at let's call it 60,000, but fear and greed's at 29. So this kind of goes to show you, for those of you who've been in Moonstream a long time, if we go back and we look at the max rate here, I mean, this is a lot, right? This is a lot to take a look at, but look at how low sentiment is right now. I mean, we're in like, you know, 20, 30. That's pretty low sentiment. But we've had times back here, you know, where fear and greed was super high, at a high of 92 out of 100 back in mid 2019, and that's when Bitcoin was 14 grand. So we had a greed of 92, and Bitcoin was 14 grand. That was the top, by the way, of that summer. Ironically, it's because rates were actually raised, and then they started lowering them, and then Bitcoin took off like a rocket. That was after that last bottom. We've also had times, you know, COVID candle of doom, that's probably about among the worst it's ever been, and then the collapse of FTX. But here we are, we're still at super low fear and greed, and yet we're still almost at $60,000, nearing the all-time high, which is just kind of funny. Okay, so low CPI print is fodder for Bitcoin to retest all-time highs, according to Grayscale Research Head. And what was interesting, though, is that when the CPI data came out as lower, which is generally more favorable, Bitcoin really didn't really do anything. In fact, it dropped. So it seems to be uncorrelated and just does what it wants to do. So the U.S. Bureau of Labor Statistics reported that the CPI, of course, covered this, dropped to 2.9, the slowest rate since 2021. It's significant because it'll allow the Fed to begin reducing rates. Rate cuts are a necessary condition for sustained weakness in the U.S. dollar. Of course, as Brett has once covered, that's the Dixie chart, the DXY. And as soon as the dollar starts losing strength and steam, crypto reacts the opposite way. It moves in inverse, generally speaking, to the Dixie. So when the Dixie drops, crypto runs. When the Dixie climbs, crypto falls.